What do I think about ESG investments? Well, that's a great question. ESG is a fantastic concept that we should really try and invest in ways that are environmentally, socially, and provide the best form of corporate governance, and that we should make our investments according to who's best in class for all these things. That's a great concept, and it very much plays to the modern idea that we live in a stakeholder-based economy and that customers, staff, everyone should be rewarded for the way that any company performs. And these are all great concepts, and I certainly stand with them all. But the problem is that very quickly these concepts get arbitraged away, and that has happened very quickly with ESG investing. Every single asset manager and investment management firm now wants to present itself as an ESG investor, and they will all pile into demonstrating just how ESG compliant they are. So they're all buying the same kind of investments that demonstrate just how green they are. And that causes a massive amount of distortion and misallocation of resources within the market. So I would characterize ESG as a great idea, but very badly executed. Okay, so you've asked me to think of think of an example that demonstrates how that distortion works. Well, let me give you a very obvious one, and that's wind power. Now, wind power is a great source of renewable energy. Once you discount the amount of energy in oil and gas it actually takes to make a wind turbine and then put it out in the ocean. But ignoring that, wind is great because it's providing us with free renewable power. And that's fantastic for any investor that wants to say they're investing in good environmentally friendly investments. And that certainly has happened over the last 10 years. Every single fund that wants to say it's an ESG investor has gone into wind. They bought wind farms because it's easy to do. But the result is, since everybody wants wind farms, it's pushed the price up, making wind farms far more expensive relative to the rest of the market. But yeah, everyone continues to pile in. And because wind farms are expensive, everybody wants to do them. And so you get more and more wind farms built to meet the appetite of ESG-based investors or ESG-claiming investors to say that they're buying ESG investments. Wind farms are an easy way of demonstrating how green you are, but it creates a massive distortion because everyone wants to do the easy stuff like wind farms and solar, but they're not then doing the more difficult but better alternative renewable power sources. And let me give you an example of that. Wind farms only work when the wind's blowing, NSS as they say, but tidal energy is completely reliable. We know that the tide comes in and out every 12 and a half hours, and you can predict that and you get perfect knowledge about how much power a tidal energy station would develop. But nobody's really investing in tidal energy. Why is that? Well, there are technical reasons. It's more difficult to build a tidal energy station than it is to build a wind farm. But on the other hand, they're far more reliable. And because it's not such a popular technology, it ends up being more expensive. At the moment, the best tidal energy is something like 6 times as expensive as the best wind farm energy. And that means nobody's willing to finance it. If they did, that cost would very quickly come down. And because of the reliability of wind farms, of tidal energy, we'd very soon find that a tidal energy station that is more complex than tidal energy and say costs than wind energy and costs twice as much would actually produce more reliable and cheaper long-term energy. This is a great example of just how distorting the rush into ESG has been. Transition is a fascinating topic, and it's one that we are getting absolutely wrong. And it's been fueled by this rush into ESG. We've taken the view that if we all simply declare that we're now ESG investors and we stop doing evil things like financing oil, gas, and coal, then overnight the world will become a better place and we'll reach carbon neutrality by 2050. Unfortunately, it's a complete and utter pipe dream. To get to carbon neutrality, which we can do, we've got to have a properly thought out plan. And it's a transition plan that accepts that you cannot change a carbon-based economy overnight. What we need to do is a well thought out plan where we have renewables such as tide, wind, and solar, but also build in elements of probably nuclear, but also look at alternatives to the way that we use fuels in terms of balancing out fuel use. So things like reforestation, soil improvement, all have the ability to sequester, that means absorb, much of the CO2 that's polluting the atmosphere. Now, when it comes to the actual transition of energy, there are some really serious, flawed mistakes being made in the market. Many people assume that batteries are a form of energy. Well, they're not. They simply store energy that's made usually by a fossil fuel source. What we need to think about is how do we do this transition in terms of continuing to use low carbon polluting fuels like natural gas in the interregnum between introducing maybe new nuclear or new innovations such as hydrogen energy. And one of the key things we need to think about is lithium. Lithium is a horrible, horrible substance. It's very difficult and dirty to mine, and we know that creates all kinds of social problems. And we still don't know how to recycle it. It will become a massive polluter once we start finding that Tesla's batteries die after 5 years. A proper transition plan could be accommodated by good corporate governance, but it's far more likely that governments, national governments, will have to step in and make long-term plans for gas to get us through the early stages and rebuilding nuclear to get us through to maybe something that looks like a hydrogen-based post-carbon economy. There is no really joined up, grown up thinking on this topic as of yet. I think it's important to remember that ESG investing is more than just caring about polar bears and penguins and building more wind farms in the North Sea. The social and corporate governance aspects, I would argue, are even more important. And that's particularly true in what is becoming a stakeholder society. One of the key things we've seen in the last 12 years of a raging bull market fueled by quantitative easing and very low interest rates has been the rich getting richer and the poor getting poorer. Workers have not seen the kind of wage increases that would be commensurate with the way that shareholders have seen the value of stocks rise. And that has issues for the future. And one of the key social elements of ESG is to make sure that everyone gets treated better in a new stakeholder society. So I would tend to look at investments that are making positive social good, as well as the obvious ones, such as what does it do for climate change and aspects like that. There is not enough attention given to investments that are going to create long-term, highly paid, good jobs and create multiplier effects round about them and create better tax revenues for states. Even more important, I would argue that corporate governance should be the core thing that you look at first in terms of ESG. Any company that is well managed and well run and has clear objectives is going to perform far better than one that simply says, oh, we're going to do all kinds of green things. That's a pathway to madness. And one of the key elements here is about the way that we're seeing transition from the old carbon-heavy economy towards a new carbon neutral economy. The companies that are going to get us there are not the ones that are promising to change the world. They're the ones that are actively doing it by thinking about how we do transition. Well, that's another fascinating question. What difference does Ukraine make to the ESG industry that now dominates investment? I mean, my view on that is simple. ESG are a great set of guidelines and should be guidelines to think about how you invest for the future of the planet, not only in terms of improving our environment, but also making it socially more equal through stakeholder involvement, and also making sure that corporates are doing the right thing. So I agree completely with ESG in that. But as soon as you make it prescriptive, you create all the distortions that we've talked about already. And then when it comes down to the practicalities of a shock, which Ukraine has been, then you need to say that ESG has to be something that is adaptable. There's no reason we can't continue on with our plans for an environmentally, socially better and better corporate governance and still face up to the reality of how Ukraine will force us to rearm in the West, force us to take a far more proactive stance to our defense, and also what it means in terms of deglobalization. That's going to change the whole way that global trade works, and that will present a whole series of different questions for corporates in terms of where they get their energy from. And it's always worth reminding ourselves that if you look around the room you're sitting in, nearly everything in it has either been grown or hewn out of the ground through mining, forestry, and agriculture. So we aren't going to change that basics. We are still going to need to plan for a future where we not only need fuel and energy security, food security, but also defense security as well. And if that's the only way to ensure our futures, then I don't see why good corporate governance and socially aware investment means that we shouldn't be investing in defense industries to make sure that our futures are the ones that we hope and expect. If you want to hear more from Shard about all the various things we're thinking about and investing in, then you can either click on the links below to link to Shard's updates, or you can sign up for my own comments on Blain's Morning Porridge at www.morningporridge.com. Thank you very much.